Hey guys, Blocktrain here with another bi-weekly crypto recap. Today is Tuesday, April 24th. As you know, I record the day before, so just keep that in mind when I'm talking. So, it's been a really good past week. Um, After that initial run from around, 7,000 to 8,000, that 1,000 insane 1 hour run, Bitcoin has been doing great. For the past week up until today, we went up from, the 18th over to the 20th, around the 21st. We went on another run from around 8,000 to around 8,900. And for the past 3 days, we've been hovering around the 8,900 mark. Now, just to understand just general sentiment in the market, I think what a lot of people were thinking was, the run from 7,000 to 8,000 was a surprise. We didn't really expect that. 1 hour to go up $1,000, that's pretty crazy, right? But from 8,000 to 9,000, we saw, I wouldn't say, like astronomical gains where 1,000, price increase happened in another hour. It happened over the course of a couple days. But at the same time, because we reached this, this plateau of about $9,000. Now, as you can see here, we never really reached or managed to get past that $9,000 point up until around today. And so, when we were around this period where we're hovering around 9,000, there was a lot of talk, 9,000, if we can pass 9,000, we're really going to get there. And I think that's actually pretty accurate just because, if we were thinking about it in the past 2 weeks, we went from 7,000 to 8,000 really easily. We didn't drop down from that. We went from 8,000 to 9,000 pretty easily. But then for 3 days, which is a relatively long time, given, it's only been 2 weeks, we suddenly found this barrier of $9,000. And so it stands to reason that if we can't pass that barrier, if we're not going up, we're going down. Whether it's sideways movement or something else, we're just not going to pass that mark. If we don't pass it that one time, we're going to have to wait until we pass it again. And that's why I think a lot of us were really relieved and really happy to see that today we managed to cross that barrier. It's only a price increase of around $200. In the grand scheme of things, that's like 2-3% for Bitcoin, maybe less. But, the important thing about it is that barrier, that psychological barrier in the market saying, hey, we passed this 9,000 point that we haven't been able to pass before. A lot of people were selling around that point, but now we're past there. And I think that bodes really well for the market and kind of cements the fact that we're in a bull market. And that's personally what I'm thinking right now. I think it's been enough time, at least in the crypto world, to say, we've seen enough action also to say, hey, we're somewhat in a bull market now. And that if, within the next 2-3 weeks, we have another bear market, I think this run is actually significant enough that we can say that this, the bull market in the past and the bull market in the future, if there is one, in the near future at least, they're separate. That this isn't a bull trap. That this is actually a bull market, and we just have to see how long it goes. So pretty great news across the board. Let's take a look at CoinMarketCap. That paints a pretty similar stories. It's really been the week of the alts. After Bitcoin went from 8,000 to around 8,900, 7,000 to around 8,900, we've really seen an increase in alts. Bitcoin Cash, which is kind of the counterpart to Bitcoin, where you hedge your bets against, went from I think around like 700, 600 to 1,500, which is absolutely insane. It really went on a run there. And I remember the last time Bitcoin went on a run, Bitcoin Cash came up after that. And so this is following a pretty similar trend. Ethereum also really oversold, went down to around $400. And now it's back right around 670. So again, it's seen a pretty solid rally. Ripple as well, almost at $1. So overall, things are looking really, really good. And just on a personal note, I just find it really funny that things like Bitcoin Gold or Bitcoin Private, kind of forks of Bitcoin that aren't as legitimate as either Bitcoin Cash or Bitcoin, and are known somewhat as scam coins, they tend to rise the most when it comes to these bull markets. And I think actually seeing bad coins go up a lot is actually pretty indicative of a bull market, because it, in my opinion at least, this is what I think when I see these, kind of scam coins really go up in price. I actually think that it's a pretty good indication of just dumb money coming in. And as much as, in theory, we're supposed to hate dumb money, I actually kind of like dumb money just because, it signals, the bulls coming back. It signals price increases. So, in a perfect world, the market would be rational, and, if you thought about it, you did your own research, and you picked the right picks, you would get rich. But, that's not how cryptocurrency works right now. And most of the people who, cause these bull runs are actually people who don't do any research, don't know anything, or just coming in from needless marketing. And so things like Bitcoin Gold, things like Verge, they're the ones who are gaining. They're the ones who are really going up. So I don't really have too much to say about the markets. Overall, it's been really good. Green across the board, a couple of small reds, nothing too extreme. But overall, it's just been a great week. And just as a note, I wanted to say that while we were in the bear market, I really like to, pick these positive news stories, talk about, the technology coming up, thinking about the long term. But now that we're in the bull market, what I'm hoping to do is I'm trying to, talk about caution, talk about doing your own research, talk about not FOMOing in, just because I feel like in the bear market, it's really tempting to try to cash out and not think about the long picture just because you're losing money and you want to get out, you want to stop losing money, you're not thinking rationally. And the bull market is kind of the opposite of that, where you don't think in the long term, well, the same thing is you don't think of the long term, but you see all these coins, you see Bitcoin Gold going up 30%, Bitcoin Cash going up 100%, and you think to yourself, if I just invested in those, I could be making that much money, and you feel like you're missing out, and you feel like you're not doing as well as you could. And I just wanted to say that you're never going to catch every pump. And just looking at the prices and comparing them in terms of their percentage increases actually is a really bad way of judging it, because you have to realize that nobody is getting all these pumps. The people who are getting in there on these pumps are either, number one, people who have insider trading, which I don't know how much of that goes in to the crypto markets. If it does go in, then, none of us actually have any specifics. But also people who believe in that coin and just stay within that coin. And I actually think that's the best way to get gains within the cryptocurrency markets. I don't always, say you should hodl, but I do think that in the bull market, hodling is actually your best option. So that said, in terms of the news that I'm going to be talking about, I actually want to be talking about the long term, just because I really don't like talking about, what's the next moonshot, what's going to go up 50% tomorrow. I really don't think those are productive things to talk about, or even, things that you shouldn't be taking my word on that because nobody knows. So that said, on a somewhat negative note, I wanted to talk about the MIT, blockchain experts weighing in on the impact of SEC action. And the first sentence really says it all. Regulation. It's good for you, but it's going to hurt. So I won't, when you think about the cryptocurrencies in the long term, I hear a lot of sentiment where they say, oh, just wait until institutional investors come in. Then it's over for blockchain. Blockchain goes mainstream, trillions and trillions of dollars of market cap, and everybody's rich, basically. And while that is, a really optimistic way to look at it, I think what's going to end up happening is that regulation is going to come in waves and not in a good way. It's going to come when, we're in a bull market and regulation will cause a bear market, just like we saw those dips when Korea banned ICOs, when China banned ICOs. And I think we're going to see more and more of that as, even projects that exist right now, they're shown to have violated some laws, or, that these coins are going to have to adapt on the fly as new regulations come in. And the thing is, it's scary because we don't know what's going to come. And you can't think of this as, regulations are going to be done within 2 years. That's not how the government works. That's not how bureaucracy works. You're going to be seeing regulation come over and over and over again within the next 5-10 years. And so I really think in the long haul, you can't really think about it as, a point where blockchain just goes mainstream. You have to think about, you have to take it in waves. You have to understand the market at each point. You have to be keeping up with the news and understanding, where the governments are at, where you think they might go, to make your own educated opinion. So basically, the main takeaway here would be to say, don't make blanket statements about where the crypto markets are going. In general, I do think they're going up, but again, they're a market like anything else. They're going to have their ups and downs, and you can't think of them as your only chance to get rich, your only chance to really make that bunch of money, and you have to be smart about your investing. That said, let's talk about some real news, which is that Coinbase suspends WikiLeaks shop for terms of service violation. So basically, Coinbase said that they can no longer process brokerage orders via their banking relationship, and WikiLeaks just can't accept Bitcoin anymore because they were going through Coinbase. So I think a really important lesson that a lot of people have realized here is that cryptocurrencies in general are just not. Well, sorry, cryptocurrency exchanges in general, they're not trustworthy when they're centralized. Like, the entire point of the blockchain is decentralization, that the fact that nobody can control anything. So when you see something like Coinbase, which is a centralized exchange, suspends WikiLeaks, you really start to understand that Coinbase exchanges, like Gemini, these are centralized exchanges that hold your money, that can take away your money, that the government can access. And at the end of the day, the bottom line is that's not what cryptos are about. That's not what decentralization is about. And that's why Bitcoin was made and what we're trying to get away from. And decentralization is really the central idea behind the blockchain. And I think this is actually a really good wake-up call in the sense that, a really, I don't want to say beloved, but, a really reputable exchange like Coinbase, at the end of the day, is just like a bank. It's just a centralized entity. And even if you like exchanges like Binance, you should realize that the way we're going in terms of decentralized exchanges, those are the future. That's how you protect your money, even within all this regulation. That's how you make sure that the ecosystem is robust away from government entities. If you have, a Binance-like exchange that's decentralized for the whole world, what can any government do? No, they can't do anything. The cryptocurrency environment can thrive without governments because of their inherently decentralized nature, but we just have to get to that point. That said, we can also work with governments, and we will have to work with governments. Well, cryptocurrencies will have to work with governments just because, governments aren't going anywhere, banks aren't going anywhere. In my personal opinion, people who say that banks are going to die because of cryptocurrencies, I think that's really foolish. I don't think that's going to happen. There will always be a need for banks. And I think a lot of people actually like the fact that banks keep their money insured, with something like the FDIC. Something about crypto is that it's really unforgiving. You lose your private key, your money's gone forever. That would never happen with a bank. Sure, you have to trust the bank, but it's been working pretty well so far without blockchain. Of course, trust is sometimes broken. We're thinking of Equifax, we're thinking of Facebook, but at the same time, I have money in my bank right now, and I'm not nervous. I don't think it's going anywhere anytime soon. I don't think they're going to go bankrupt anytime soon. And there's a certain safety in knowing that my money is insured, even if it's lost via the FDIC. And I think that's what crypto is lacking, even with smart contracts or things like that. When there's a flaw in the smart contract, it's gone. It's gone immediately. There's no fail safes. There's nothing you can do. Private keys as well. There's a trade-off for owning your own money, which is, a great thing, but it also is a lot scarier because you have no fallbacks. You don't have insurance. So that's it. California bill would legally recognize blockchain stocks. Now, this is obviously just a huge thing and like a huge use case for cryptocurrencies or blockchain in general, which is, you can make stocks, which is that coins basically act like stocks to a certain extent in that they're used to raise money. They can be, bought and sold to an even greater degree and liquidity than stocks can. So it makes sense that stocks would be turned into, like blockchain coins type of deal. But the idea here is that California could become the next US state that allows companies to store data, including information about stockholders, on the blockchain. So the idea is that you could have stockholders registered so that easy liquidity and changing hands between them. And I think this is just cool, just because adoption is always coming, governments are always advancing, and I think one thing to really be looking out for is that we see countries and states and just places that are more friendly to new technologies are actually the places where they become a hub. Think of Silicon Valley. San Francisco wasn't really that big until Silicon Valley came in, and that's because they were incredibly friendly to these tech guys. And so we're really going to see from now on where the blockchain stars come in. Who's going to be the big blockchain company? Where is, what's going to be the big blockchain space? And I think everyone should be keeping an eye out, for like legislation and rules and laws that come out within each state. For example, I think Wyoming, I might not be correct about that, but I think Wyoming is a notoriously friendly crypto state. So you have to just be thinking about, where is crypto going to be successful? And, if you like making money, it's actually something to be thinking about, is that if you think blockchain is going to succeed, you have to think about what companies would, really take advantage of blockchain and really grow their market through blockchain, what states and real estate you could invest in that, blockchain companies coming in could really rise that up. You have to understand that blockchain isn't just an investing opportunity just for cryptocurrencies, but it's a complete technological revolution. And that has implications, even beyond just cryptocurrencies. So another thing to say is that China says it has safely shuttered ICO's cryptocurrency exchanges. Now this might seem like bad news, and to a certain extent it is, where China used to be such a big player in the market, but now it's like pretty non-existent. Well, not non-existent, but in terms of actual legislation or actual regulated exchanges, there are basically none. You can't really participate in ICOs or anything of that matter. But there's a lot of underground kind of crypto trading going on and decentralized exchanges, I'm sure, within China. But what's good about this is that though they're moving to block all the websites and they're trying to get rid of the few options that Chinese citizens do have when participating in these ICOs and buying these coins, I think for the most part, once China gets to this level of a complete ban, which is, it's basically there already, you can only really go forward from this. This is basically rock bottom. This is saying you can't do anything. And eventually within the future, because China's not stupid, they're not going to say no blockchain technology, no coins ever. Regulation is going to come. It's going to come faster than some place like the US, just because, their government is more centralized and can make decisions faster and more efficiently. And so I really think this is actually pretty good news in the grand scheme of things, just because, it was pretty bad when China first banned them. There was a lot of price drops. But now that we're here and we're at the bottom of Chinese involvement, really you can only go up. More Chinese money is going to come in just as the government starts to regulate. And China is, it's a huge country in terms of the amount of money that can be coming into the sphere. And so we're already at a 400 billion market cap without China. So imagine how big we could be with China coming in. When will that happen? Not sure. But it's important to note that, hey, it's pretty important to note that, China's going to be coming in someday, sometime, and that, even when prices are rising right now, we're doing that without China. So just imagine what would happen if we do that with China. So the last bit of news is that Goldman Sachs hires crypto trader as VP of digital assets in response to client interest. Now, this was actually a pretty interesting thing to read about, just because Goldman Sachs has been saying that they don't want cryptocurrency, like they're not going to implement a cryptocurrency trading desk. But there's a lot of contrasting actions from Goldman Sachs, like hiring crypto trader as VP of digital assets. And what I think is happening is actually that I don't think they're going to make a crypto trading desk because again, for people like you or me or you, I assume whoever you are watching my video, you're not a huge investor. You don't have millions of dollars to invest. You don't have billions of dollars to invest like Goldman Sachs. And the fact of the matter is, our risk tolerance is so much higher than Goldman Sachs or these big investors, just because we have way less money. So, most people are probably thinking, why wouldn't these banks get in? There are 20, 30% gains to be made. And I just want to, kind of nail in the point that in traditional economic theory, the idea isn't that you're trying to make money. Well, it is to a certain extent, but really the idea is that you're trying not to lose money. And the fact is that, when you're invested, when you just have US dollars, because of inflation, your money is going down. So you have to do something to combat that. And so you start investing in other things. But the idea is that you're not trying to gain money. You're not trying to make the end goal is not to make the most money that you can make. And that's not how you're supposed to be approaching things. You're supposed to be approaching things as, how can I lose the least amount of money? And in the process, somehow gain money. And that's kind of my logic for why someone like, JP Morgan or Goldman Sachs won't be coming in anytime soon. It's just because the crypto markets are just way too volatile right now. There's really no reason to put in billions and billions of dollars in there when you have the potential to lose billions and billions of dollars from one bad trade. That's just not the kind of risk that they want to be taking on. I think Bitcoin actually needs to be more stabilized and needs to show that they're decently, stable, that they will always come back and that it's not like a dead thing before these big financial institutions really get into the space, really say, okay, we're going in on these currencies. And I think the market still has to mature a little bit, but I think that's actually really good just because, well, institutional investors coming in, they really will shove the small players out. Not in the sense that we're not going to be able to do anything anymore, but in that they're going to control the market like nothing we've ever seen before. We talk about whales now, but these financial institutions, they're bigger than whales. They're the freaking ocean. And we're like algae. There's just no comparison to the average person or even the big whale to these trillion-dollar institutions. And so I think it's actually a good thing that we're going to be spending some time without them, and I think we should make the most out of this time as we can, because again, I firmly believe that blockchain is going places within the next 5 to 10 years, and while we should be looking out in the long term, we should also be enjoying the short term and really trying to maximize our gains when we can. So that was this week. It's been a really good week, and I just want to say one last time that please just understand that you're not going to catch every high, every pump, every insane increase, and that you shouldn't be thinking about it, ruminating about it, saying, oh, I wish I had bought that coin. Number one, it's just not good for your mental health, and number two, it's just you're thinking of an impossible ideal. You're never going to get there, and you have to think about it as, when you make gains, that's a good thing. Even if you could have made 1,000, if you made 500, that's great. Why are you sad about that? And I'm definitely guilty about this as well. So, let's hope we can all just rein in our FOMO. And that's just one of the biggest things about investing, is that a successful investor is one who can, put his emotions aside and think logically about what's going to happen next. And that's what I'm trying to do. And I hope you guys will try to do that as well. So thank you guys for watching my videos. If you guys liked it, please leave a like or subscribe. Again, always liked, always something I appreciate, but it's never necessary. And I will see you guys next time.